Thanks for joining me for the weekly wrap. My name's Jessica Amir. Well, US equities have erased all of the coronavirus losses, with the Dow, the S&P 500 and the Nasdaq all at new record highs, while Asian and Aussie equities are playing catch up. On Thursday, the ASX 200 closed 1.2% off its record high, with a yearly gain of 5.4%. Polynovo, Orocobre, Elders and Afterpay are up the most this year. As for the top 20, it's up even more than the ASX 200. It's up 6.4% so far, with Woolies, CSL and Goodman up the most in that class. Positive global sentiment has been restored for a couple of key reasons. One, the number of those recovering from the virus outbreak is now 2.4 times greater than the number of deaths. And the number of cases detected is slowing, with containment and screening also improving. Plus, labs around the world, including a collaboration with the US and China, are working on a vaccine, while Trump was acquitted of both his impeachment charges, and China surprisingly halved tariffs on $75 billion of US goods to help offset the coronavirus impacts. And last but not least, earnings results in the US and here have helped to prop up equities too. Well, Aussie equities hit that record high back on the 22nd of Jan, but selling started to mount in energy, materials and consumer staples, really on the back of the outbreak. So is this a buying opportunity for your long-term asset allocation? Well, a lot of economists have faith, saying this will only impact markets and the economy on a short-term basis, but it's really too early to say. But Mercer this week has said China remains its largest position in the emerging markets, despite the outbreak, as its economy has one of the strongest outlooks and GDP rates currently as well. And back home, early estimates suggest the coronavirus could impact our GDP by 0.1%. That's on top of the bushfire impacts of between 0.4 to 0.5%. But once the travel bans do end and the virus is contained, then economic activity is tipped to strongly bounce back. Adding to that, the northern wet season has kicked off, and it's been encouraging for the staples sector, with cattle prices in particular on the strong move up. So what changes have we seen since the start of the market? Well, as for our clients, they're continuing to buy into the materials, financials and tech sectors the most. The most bought top 20 stock has been Rio Tinto, as investors take advantage of the dip, while Credit Suisse and UBS trimmed their production and earnings forecast amid the corona impact. And in terms of the biggest rallies outside Polynovo in the top 200, well, Orocobre has seen a stunning 32% gain this year, as the lithium price surged on the back of Tesla's shares hitting that new all-time high day after day, and then seeing a bit of profit taking. On top of that, the UK government also announced it will ban petrol and diesel cars from 2035. Orocobre and Galaxy are our top picks for the lithium sector, so keep an eye on these stocks this year. As for what to expect out of the floodgates next week in terms of reporting season, well, Suncorp is the first of the regional banks to report on Tuesday, and we know the bank has flagged at the start of the financial year that it's already been hit by 3 natural disasters, from bushfires, hail and heavy rain. But it does have enough reinsurance protection, 820 mil to be exact, that should cover the rest of the year for these impacts. Bell Potter cut its net profit after tax estimates by 2%, but held its buy rating in Suncorp, noting the share price pullback is a good opportunity to invest. Bell Potter's targeting a price of $14.60. UBS targets $14. But our house favoured regional bank is not Suncorp, it's Auswide, as it's the only bank that has been upgrading their earnings and forecasts. And on to the major banks. Well, CBA is Bell Potter's preferred stock out of the Big Four, and all eyes will be on their results next Wednesday. We're expecting stat profit of about $5.8 billion, and that's excluding that sale of their asset management business as well. Cash net profit after tax, or cash NPAT as it's called, from continuing operations is tipped to be $4.35 billion and also expect a $2 interim dividend. And Bell Potter has the stock as a whole with a target price of $86. And this week we also saw Credit Suisse downgrade CBA to an underperform after the bank announced that $83 million write-down from bushfire insurance claims. And NAB reports first quarter results on Thursday next week. For more on what to watch on all the banks and the insurers as well as the regional banks as well, don't forget to check out our Bell Potter Head of Research interview with T.S. Lim. It's available on the website. And that's it from all of us at Bell Direct for the week. Have a happy and safe weekend.